Good morning. We continue our forum and open this session, which will be about prospects of development of precious metals market. I would like to introduce our participants. Denis Sharipin, Director of the Department of Marketing of Norilsk Nickel, Nikolai Sosnovsky, Metals and Mining Director and Capital Management, and Mikhail Leskov from Geotechnology Institute. In the previous forum, we paid a lot of attention to particularities of the development industry in the context of COVID-19, and we also noted positive dynamics in mining and production of gold. At this session, we propose to our participants to look at a wider range of topics when we talk about precious metals, and we'll include palladium and platinum metals. So we'll start with Denis' presentation that will talk about platinum and palladium metals. So Denis, over to you, please. Good morning, dear viewers. Thank you. I would like to thank the organizers for their invitation, for this opportunity to share how we see the market of platinum and palladium. You may be aware of that Norilsk Nickel is one of the largest producers of palladium. Our share in the market is over 40%. It's more than the share of OPEC in oil production. So we understand very well what is taking place in the market of these metals, and it is with great pleasure that I'm going to share with you this information. So let's go to slide number 2. Palladium, 83% of its usage is directed towards car industry, where it's used as neutralizer of emitted gases, flue gas in cars, and if those are combustion engine cars. So platinum is also used for those purposes, but its picture is somewhat mixed. About 40% of it is used for those purposes. So palladium and platinum, the trend and dynamics of car industry have impact on them. Cars, depending on the type of engine they use, it has a lot of impact on consumption dynamics. In 2020, we witnessed significant shrinkage in car production because of the coronavirus crisis of 16%. In the beginning of the year, those expectations were that production will recover because of the strong demand, but because of the shortage of semiconductors, and forecasts were changing all the time towards lower numbers. And so in 21 and 22, if you look at outlooks at the beginning of the year, so 8 million cars are for less, so which has impact for this current year in terms of metal consumption volumes and the following year as well. So if we look at the palladium market, so structurally we see lower expectations for car production, which has impact on consumption, and we see that recovery of demand in 2021 is going to be more like 4% in 22. Consumption should increase by 6%. At the same time, the supply that last year was 9.5 million of ounces. And there were some problems in South Africa mostly Anglo platinum. So where they had some failures, converters failed. But this year we see that some unfinished productions that got stuck at those companies. So an additional capacities came online in South Africa, where they learned to work during the coronavirus pandemic. So that means the coronavirus does not have that major impact anymore, and production on the whole has been recovering. We see a 3% growth, and growth rates will be accelerating in 2022, even though production of that metal and also secondary metal production will increase by 5%. So as a result, the structure, we see shortages in the palladium market, and that we have seen since 2014. That means deposits. So explored deposits, they have no impact anymore on the market. We see the market structurally transition to shortages, and we see that shortage in 21 will be around 150 million, and in 22 shortage will be as you can see. So we talk about the platinum market. We see some structural surplus, about 1 million ounces, and it's explained mostly by a continued trend of supplication of phasing out diesel transport. So in Europe, that transport is 55 to 60%, and that share was even larger 8 to 10 years ago. But according to recent data, in October, share was 17%. So we see a significant reduction in diesel transport. And platinum is mostly used for diesel vehicles and neutralizations for combustion engines use mostly palladium and rhodium and their compounds. So for that reason, this structural shortage will persist, and jewelry industry does not contribute to that in an important way, and we have not seen there any symptoms of a significant recovery. So far, as long as demand for this metal is lower. Next slide, if we could. If you look in long term, so with the green agenda being in place, and with increased share of electric vehicles being used, so of course it raises the question of consumption of these metals, especially palladium, so they'll be replacing combustion engine cars, and some may jump to the conclusion that you can forget about this market, even though I don't want people to jump to those conclusions too quickly. So let's look at the factors that will determine the balance of supply and demand for this metal going forward in the following decade. Carbon neutrality. As you know, COP26 took place in Glasgow, and we saw statements about most of the countries. They want to achieve carbon neutrality, and they cite initiatives on full decarbonization of transport by 2040, which was supported by only 38 countries and some major car producers such as Volkswagen, Toyota, Renault, Nissan, and some others that decided not to sign this. So to demonstrate that they're not ready to quickly transition and to switch fully to electric vehicles, and such major players as US, China, and Germany, they did not fully sign to this agenda as well either. On this slide, even though there are different forecasts about electric vehicles, what we will see in 2030 and 2040, the spread is fairly large, but we see for sure that over the last 2 years, expectations with regard to EV share and their production volumes by 2030 have gone up. Before the coronavirus, expectations were also major, and the spread was, but so they were thinking about 25 million electric vehicles using accumulator batteries. So currently, so it shifted towards 25 to 27 million vehicles per year by 2030, and undoubtedly it was impacted by a decision adopted in Europe this year and elections of President Biden that supports the green agenda. So besides China and Europe, so United States joined that green agenda, and undoubtedly the coronavirus helped to simultaneously provide financial liquidity to the markets, and a lot of that liquidity went into green technologies to develop batteries for EVs and just produce more EVs. We see this trend in place, and that there's some risks for palladium consumption there, but there's a potential for companies, for those who compute nickel and copper, even though many commentators also, when they talk about classification, they talk about hybridization of transport, even though there's some restrictions on speed. I'll tell you more about this just now. So hybridization should help automakers to accelerate reductions of CO2, so not to be penalized for that. In Europe, they have such requirements to reduce CO2 emissions per kilometer for a car they produce throughout its life cycle. So hybrid cars, which are developed just as much as electronic vehicles, so they use internal combustion engine. And there's a mode of start, so-called start-stop system. So the spirit is expanded, and so at those cold temperatures, catalysts do not really work well at those cold temperatures. So these engines work better compared to conventional internal combustion engines. So next slide, if we could, you can see and the rates of that hybridization. As you can see, we can see growth, we can see EVs and also hybrids, and we see significant growth in, from 2020 to 2030. So let's also discuss the plans of accelerated electrification. It's on the next slide. According to some estimates, 83 trillion investments are required. And of course, there we have some optimists who support the green agenda. Maybe some people say those are populists, but those countries promise to become carbon neutral, especially in transportation. And every country has its particularities and specifics, and clear understanding that it's one thing when share of EVs in your fleet 1 to 5%, maybe 10%. So you have specific issues to deal with in that situation to maintain that structure. But when you have 20, 30, 40% of EVs, then you have such issues as, is the grid ready for that? Because you need to have more power from the grid. And what about power generation structure? So, and CO2 emissions may increase the more EVs you use, because their implementation should be synchronized with implementation of renewables in power generation. If they should be implemented, that's an additional demand for metals and copper and nickel and other metals and composite materials. So those supply chains should be created and expanded. And if we increase the consumption of electric power, that means current grids may not be sufficient. They should be expanded. Or you should create a system, a network of charging stations. So that requires a lot of investments as well. And also we need to reduce fuel taxes. And look at the impact on labor market. So in Germany, every eighth worker in the country has some relation to the auto industry. So if this transition to EVs happens, then fewer components will be needed compared to cars that use internal combustion engines. So they will have impact on the labor market, because so many people work for automakers in those countries. And there are some other potential problems that those countries and industries will face. And if we compare it to the cars with internal combustion engines, EVs are more expensive compared to them throughout their life cycle. Of course, their production costs are being reduced to achieve economy of scale, to localize productions of batteries, but so far it doesn't work without subsidies. We know that in China those subsidies were reduced and production volumes of EVs was down because of reduced subsidies. So, to conclude my presentation, I would like to go to slide number 10. So finally, if we look at a long-term forecast, what will impact on the balance of offer and supply of the palladium market, we expect there will be a clear growth of cars with internal combustion engines. There will be hybrid cars, and as global economy grows, we'll see that more cars will be produced. So for that reason, and including in cars with internal combustion engines, at least in midterm, we will see general trend of introducing stricter regulations on emissions. In Europe, and requirements for emissions, so they become stricter, and also in the United States. And in Europe, they discuss Euro 7. We want to see the characteristics of this new requirement. It will be implemented starting from 2026. So it should improve the quality of fuel, motor fuel. There's another thing, because of this price spread that exists. It's between platinum and palladium. So in that range, price is twice as higher. On palladium is twice as expensive as platinum. So this spread has been around since 2017. It's been 4 years, and we paid attention to the fact that it's not so easy to replace palladium with platinum. Technologically, there are some restrictions in place, and to make engines more effective with higher temperature, and palladium can handle higher temperatures compared to platinum, but technological progress keeps moving, and with automakers have been able to develop solutions, and those solutions are being implemented in the automaking industry, not on a large scale, but some of the functions will be replaced, and so some catalysts will be replaced with platinum, and those volumes may become larger, but when those estimates are reviewed, it is important for us to look at what happens with platinum, and we will face structural shortages of it. So especially as hydrogen energy is developed. So the more they plan to replace it, so in the long term, so considering the fact that rhodium is in shortage, so those three metals should be considered together when we analyze it, and how palladium is used. So it's impossible to look at them separately because they're replacing each other. For that reason, considering additional production that will come online and utilization of scrap metal, market is not balanced, and also technical surplus that may happen, it can compensate as platinum is replaced with rhodium. And concluding slide, my contact info, and also I wanted to say that on November 29th we'll have an investor day, and on that day we normally publish our review on platinum and palladium. It's published free of charge on our website. So if you're interested in that market, you're more than welcome to read our review. Thank you so much for your attention.
Denis, thank you so much for your presentation. And we've just received a question regarding your report from Sergey from Rossельхозbank. So what's your take on the investment attractiveness of MPG? So what are the factors attributing to it, or on the contrary, discouraging from it? You may have known that Nornickel, we're stepping up our production, for the product range that we're operating with, and there is the South cluster, so for the south cluster, the metal, the palladium, platinum. So we have this 27 grams per ton. So that's the highest level. That's not in Russia, not in the South Africa. So the same level can be observed because at best they will have 3 grams and even 2 grams or lower than 2 grams at some deposits in the South Africa, and then they will be very deep at the level of 2.2 kilometers. So that's the mining economy that is less effective as compared to ours. That's for one. And secondly, so for palladium, and there are good prospects in terms of consumption. And the e-vehicles, so the green agenda, it is well underway. Nevertheless, this is a kind of evolutionary process, which is not a revolution. And there will be bottlenecks, so going forward, such as the production of batteries, battery-related materials. And in that respect, we see this huge potential for nickel and lithium. So nickel will be used as a base metal for cathode casting. So there's batteries should be described as nickel and graphite batteries in terms of the economic value and the materials used for their production. So clearly there is a potential on this market. So within our company, so and I believe we clearly see this trend towards developing and further exploring such deposits. So what I'm suggesting, so I would like to invite you to our Investor Day on the 22nd of November. So my colleagues will be happy to join the prospects for new projects by the company. And this will answer your questions in greater detail as regards investment in palladium and related metals. Thank you. Thank you very much for your response. And so we see that the Russian market has been developing and opening up new perspectives. So new formats of operation are emergent. And with that, I would like to pass the floor to Nikolai Sosnovsky, Director at Metals and Mining, Chemical Prosperity Capital Manager, that's specifically in relation to ESG standards. Good afternoon, everyone. Dear distinguished participants of our forum, thank you very much for the invitation. I would like to start off by introducing our company, just to outline our position in the market. So our company is one of the major investors, the public company in Russia. So we're generalist. So we'll be investing in the mining and other areas of business. So we have about $4 billion under management. And those resources, mining, steel, fertilizers, that's $1 billion. And then we invest in major companies. So we are holding larger share, for instance, 15% stake in Petropavlovsk Groups. Previously, we had 15% stake in Hali Gold and Polymetal and Tupolis. So we are a very active player and investment in the metallurgical market, especially in the gold segment. So that just the funds. So the funds, these are not our own funds, but these are the funds that we receive from our investors, international jurisdictions from Europe, sovereign, family pension funds. There's a great variety of funds that we'll be using. And our investment criteria in terms of financial standards and ESG aspects, so these derive from our customers, so the way they treat this investment, because the rules can vary, so they can go from less, more stringent rules to apply. And the core principle would be the financial benefits. So we want to increase the profitability of funds for our clients. So and if we want to get a better return, then we need to invest with those companies that demonstrate a faster pace of growth or probably undervalued at the moment, or we can do both. And in Russia, so we have a variety of segments and sectors and companies. So overall, if we take this 10-year review, so that throughout the 2000s, we saw many new openings, retail chain actively developed because the retail part was quite revolutionary development for the Russian market. That was the breakthrough phenomena back then. However, over the past last decade, we saw no substantial growth, and the economy has not been growing that much, which makes it harder for us to invest in the markets. So previously, just looking at the stock exchange, you could put your money into all the shares that just circulating on the exchange. And today, on the contrary, you need to be more careful and cautious, just filtering through investment ideas and companies, and not to be guided by macro trends like top-down approach, but more centered on a case-by-case basis, going into every detail of a company, so that is picking, that's picking some interesting either financial or technical cases. So mining is quite appealing in that respect. So these are public companies, public, but not as state-owned. So these are quite actively participating companies, and they're commercially driven. So try and make use of all the latest technologies and enable them to increase their funds or to reduce their spending. So what the technology is available, they will be trying to roll out it straight away. So they'll also be looking at this best projects that can be rolled out, and this will form part of their pipeline. So we have these high rates of return. Is something that is supported by investors and something that we use as a criterion, IRR for new projects, say at 15 or 20%. That would be the threshold for the industry, and many companies, they do not go below for their mining investment. So the industry as a whole is well up and shining. So we look polymetal. So they are increasing their input of the past years, and then going from larger players to smaller ones, we see that they're performing quite well as well. So there is growth. There are good, high-quality companies with a very strong ESG agenda. So ESG doesn't limit itself to this green agenda, because green agenda is the forefront, but ESG is a more comprehensive in nature, because they do include this governance and prosperity management, would pay this great attention to the aspects of governance in the companies, so and also trying and have a say so in the legislative process and in the regulatory framework as to the formulation, definition of those laws that regulate the operations of companies in Russia. So in addition to that, they would be actively involved in the operations of the company, trying to prevent those that do not act in good faith in terms of the ESG agenda. So we are being proactive, and we want to see and promote the best standards of the corporate governance. So in this gold sector, so polymetal, so has been just the leading company. It's benchmark for corporate history in terms of their interaction and relationships with minority shareholders and with other market participants. Polis Zolota is yet another example. So in English it's Polis Gold. So the company is open and is moving in the right direction, and that is illustrated by the both international and domestic ESG ratings. For instance, Sustainalytics, Dow Jones, and all the companies over the past years have been putting lots of effort into promoting the ESG agenda and to the disclosure in particular. So they just broaden the scope of information that they are delivering to the market, so they're producing this data and communicated it to the rating agencies, so because this may help them to go higher in the rating list, and that there's this mechanism, the so-called like negative selection. And when we're looking at the companies, so when all is well, then the companies will be quite well in terms of the ratings, but that those companies that perform badly, probably taking these lowest positions within the ratings, and they can be part of this top list. So those top lists, meaning that we are prevented from working with those companies, and these are shares, and you see the shares that are traded, just people cannot invest in these shares of this particular company because it has been stop listed. So this is not a good thing to promote the market value of the company. Therefore, many companies try to achieve better results. So in the mining sector, I'd like to just mention other companies. So these are major companies, and they also taking leading positions and trying to go hand in hand with the latest trends in the market. So again, the mining industry is not that clean. Probably gold sector is the cleanest of all. However, there are just remote sites that are operated by diesel. So there are cyanides and there are storage places, so investors will be also scrutinizing this project for cyanides. So yeah, there are international standards, and for tailings, there are international standards as well, and the investors will scrutinize at the level of tailings. I'd like to mentioned Polymetal as our front runner. So that was the first company to disclose the tailings for green projects, including the solar projects and the plans for underground equipment operated by electrical mechanisms that will reduce emissions of gases, greenhouse gases. So that is a clear example where we see that the words are being translated into actions, and it's also digitalized. So this kind of investment that can just rent a return because the companies are willing to do so, and they are not being pushed or imposed on these measures. And next, carbon tax. So we all know that it will be raised probably, but this carbon tax is not that relevant to gold companies, but for other companies that are major exporters. So for them, this trans-border carbon tax, I mean, with the European Union will be a major factor, I mean, to affect their economy. And I believe going forward, I mean, the similar motivation will be relevant to gold, probably in a different format, however, for all other companies. So this is a thing to be considered. So, more or less, that's the gist of my presentation. I just would like to echo the previous speakers on the market and prices, so cycles, and this is yet another important element in the evaluation of attractiveness of an investment. So raw materials, we know that raw materials prices are soaring, and so there's base metals and ferrous metals, mineral fertilizers, obviously. So that's the upper part of the cycle. So, and for gold, gold is lagging behind. And from this perspective, so the printing money and inflation is there, but still that didn't just brought gold prices up. So these are raw material, the commodities, so probably for commodities, and probably if we're somewhere in the mid-term cycle, we will not double our prices for nickel or copper, and the downside for gold will be to far more lesser degree. So by the end of 2021, so we see that the output of gold companies is on the positive side. So the companies are getting good returns. So the inflation is not that high in Russia. So this is not seen as a problematic factor to the company. As I said, so the companies are doing their business, so they are growing and they're paying out good dividends. So they have strong dividend policies. So they are sharing their gains with their shareholders. There is no hidden agenda at all. The funds that are being gained, they're fairly distributed within the shareholders, probably not at the highest rate, but still. So it's a moderate rate. So because in the past, gold mining companies did not pay out any dividends, and now we see that they do pay. So that was the major change that attracted lots of investors to this sector. So that we are centered on Russia and the CIS countries. So we therefore, from the international perspectives, for Russian miners and for Russian miners, yes, we do see problems with the lack of new discoveries, such as major new discoveries probably, but in other countries they neither have lots of new discoveries. But back in Russia, there was a period in time when we stopped an exploration, and then it affected the entire level of reserve. However, those operating companies in the near term, they do have a very strong resource base. They have projects with high return rates, and so they increasing their output. So exploration does take lots of time and money, and with an uncertain prospects for the deliverables. And we'll be looking at the horizon in 5 to 7 or 10 years, and going forward, there may be substantive problems. So even for those companies that invest in the sector, and I think Russian companies have a good standing in this market, and we would like to have also the junior companies, because they can be seen as a part of reproduction of mineral resources in the industry, and that is in principle works quite effectively in many other countries. Probably this is not a niche for prosperity, so because with pension funds or mutual funds, I mean, they will not be diverted to the mining, but for those projects that are just well into the exploration stage and nearing their operational life, so we can consider them for the purposes of investment.
So when this palette to be expanded, the range of production companies, medium-sized ones, which would provide additional tools for investors, so they would be able to invest, and companies would have some additional support in terms of the resource base. And it's not really a secret at all in this industry around the world, because they work according to the same rules, and those rules help them to work in a stable way. So the good things that exist can be used in Russia, and we can continue to successfully work, and so they can continue to generate income from themselves and their investors. That's pretty much all I wanted to say at this point. Thank you so much, Nikolai. And to continue with this presentation, I would like to give the floor to Mikhail, who will talk about M&As in this sector and its prospects going forward. Thank you so much, Irina. Good afternoon, dear colleagues. My presentation that should be displayed on the screen anytime now was prepared on the basis of our materials, which we published on a monthly basis, and we also have appendices to that. So appendix is published on a quarterly basis, and most of you who are participating in the conference, you receive those materials. You have seen those reports. I will not be reiterating them. And either Andrei Krylov or myself will help you to receive those materials, so please contact us. I prepared this presentation based on those reports with my colleagues, including Sergei Balyshev from our Khabarovsk office. So let's move to the next slide. This is the structure of the things I would like to discuss based on recent movements, changes that we have observed. We can discuss what the current situation with price trends in the market of gold and its marginality of active projects and those planned projects, how it impacts investor appetite and what consequences may stem from Russian M&As in the gold market from the perspective of earnings, profitability of those companies, and also stability and size of this market. Here you can see correlation. You can see the dynamics of transactions. We see they correlate well with gold prices, including 2020. But this is an external correlation. Most likely it's a combination of rates of both of them. So when one provides an incentive for the other and not a single transaction is prepared in a short time, it takes months, even years normally, at least a year, and 6 months would be record time, and there's some inertia that happens, and there's some inertia with regard to how the deal is closed and how they correlate with prices, because prices was overheated, and now we see a downward trend, not as sharp compared to some other minerals, but still, that is still the price levels differ very much from what we saw a couple of years ago, of course. So they're pretty much 1.5 times higher, and also production costs, even though they increased, but production cost rates are also accelerating, but the costs did not increase by 1.5 times. Eventually, they will reach each other, but most likely in 2025 or 2026, if we follow these assumptions, and we have having this input data, which is reliable so far. Of course, all this time, the ruble has been fairly volatile, and that also has led to some situations with regard to recalculating rubles into dollars, and we recalculate OPEX and CAPEX in our mining or production projects, and that may also have negative impact, but also on fuel and lubricant prices. We see some short-term impacts of that. We also have average values over longer periods of time that go slower, and those spikes or those falls which are short-term, they're leveled out over time. So that means that profitability of gold mining, gold production, will be fairly high at the horizon of 4 to 5 years, during which we expect those price trends to reach those numbers. So there is hope to mitigate this growing trend of that uptrend of growing costs, and maybe we'll be able to decouple it in the second phase of the trend, so to maintain marginality. So, of course, everybody is concerned about that. Investors that join the gold market and also producers of gold, they're concerned. So I can call them juniors, even though for the market, they're not necessarily juniors. They're because they're not new people necessarily, because I will call them neophytes, if you will perceive. So these neophytes, these new people, demonstrate a lot of interest towards this industry, because most of the time those companies and investors are operators in adjacent industries where growth potential has been exhausted. They're not able to reinvest the money they earned into future growth of their businesses in their sectors. So investors look for other opportunities to invest, and gold remains interesting. So there's interest towards this industry, and it's not a speculative interest, it's a consistent interest. And so they do this by implementing their investment strategies. They do it consistently on a large scale, and we see this in among new large players. And we'll discuss them and name them. So these are important transactions or deals that over the last few years that really shook the gold market. Mr. Sviblov acquired some assets, and he started active development of those companies. In the end of 2019-2020, he started to doing high gold and then Trans-Siberian. In 2020-2021, Kamchatka gold. So as a result, even we look at this based on the results of 2020, he consolidated in his hands assets that made him put him to number 3. So, and there are some other, I will mention them, those who also made some acquisitions and who are getting close there. So they were very active, not only acquisition of assets, but also in terms of their development. Also, new acquisition rate will not be as high because that appetite is limited, but active work with acquired assets, improving them and making sure their development is more accelerated. So those options are being considered.
Михаил, мы ждем.
Hello, am I back? Yes, you are back. I'm sorry for that. Apologize. We had some technical issues. Can you hear me okay now? Because I could not see my presentation anymore. Thanks for that. Sorry. So to continue with this conversation, of course, those who made it to top 5 will do their best to stay there, to make sure each company that's there production will follow its own dynamics, and the largest companies have the best opportunities to maintain their positions or boost their production and remain in that top layer, in the top of the rating. One of the most intriguing stories over the last couple of years is the story of Konstantin Strukov of joining Petropavlovsk. It's about a corporate conflict about Petropavlovsk's share being diluted, and there should be another cycle of development in this story. We see that Konstantin registered property. In that way, he started to own Petropavlovsk personally, so that looks like a foreplay before something else happens. Polus acquired one of the largest remaining assets, Sukhoi Log. We were expecting that for a long time, and obviously, so active work with Sukhoi Log and establishing mining there doesn't mean that Polus has no appetite for any further acquisitions. Most likely, as that project takes off, and as they strengthen it, in parallel with restructuring of assets and with delineation of priorities, Polus will most likely keep searching for other prospects to acquire more, mostly among assets at early exploration stages, and so in the area of main hubs where their assets already exist. And most likely it will be a combination, it will be related to geography, so they do find worthwhile assets, they will go ahead with it. Another major acquisition that happened recently was done Seligdar in Rostek. So Rostek acts as a smaller partner in that alliance. So it still stays in Tundra, and most likely Kuchus will have the largest share. So Rostek has some hopes, and there are some goals for them that will help them stay there longer, but the largest distributed asset in Russian deposits now, it has an owner. It's a complicated asset, but it's a large site, and of course it has some impact on Seligdar shares. It had a positive impact on it. Another large story that everybody was looking towards this. So another asset that was acquired in Russia, somewhat unusual, so that was not acquired in a typical manner for Kinross Gold, because they were looking for a major site with a lot of gold in it. So in that case, they acquired Chulbatkan, so which doesn't have a lot of gold content, but most likely where they'll have to use alkaline processes. And so it'll be very interesting to see how that large international companies will work, how we'll be using plant-based methods and also use alkaline processes. So that should be very helpful to be able to see that, especially in those far eastern territories. But that's not the final point, most likely. And they will stay, which is great for all of us, because it's a major international investor into gold mining, over the last 3 decades. But that's not the last acquisition, most likely. Another story, maybe not as large, but still significant. So, closure of deal between Mangazia Zolota and Itaka deposit in the east of the Baikal Krai, so which is a complicated deposit. So now this site has an owner, so which is a good springboard for that player, and surely their development will not stop there, but it's an incentive to further develop production. And another deal of importance, it's not a large one, but still, RTO, after discussing multiple options, Copy Goldfields and Amur Zolota merged, and they swapped their mining assets in East Russia against shares of Copy Gold. So in Stockholm. That's an unusual story. We'll discuss it a bit later. There are two trends there. So those trends coincided, and we see some move towards listing. And the owner of the company also owns of Russian Platinum, and he owns a large ore project in Kyrgyzia that was recently launched, and there are some good prospects for them to grow, to produce more precious metals in Russia and in neighboring countries, having this platform in place. And also with the opportunity of making those assets publicly traded, they can use this platform for further growth. Atom Gold, a new player, a new name. So they didn't do any mining before. It's a large producer of pipes. So Shell Pipe Group. So currently, Andrei Komarov exited that business, and he entered precious metal mining. So he bought a site, and then also bought a stake in Zoloto Kamchatki from Vladislav Sviblov. So it looks like a new large player is being formed as a result of these actions. So I wonder if other shareholders will join, and if other assets will be added. Among those who already generate cash, those who already produce metal, and that are closer to production. So each one of them is interesting, but they're still at early stages of development. Then SN Gold Mining, another interesting structure. So with shareholders that come from this industry, with the industry dynamics. So it has some smaller sites, but they're getting close to starting production. But they entered the industry in a different way. And we also have some international other companies and investors that have interest in this market. That means the whole market is rapidly developing with this number of transactions. So with a great probability, you can forecast that, having seen what has happened with the assets and acquisitions that I just mentioned here on this slide. Can you hear me? Mikhail, which slide would you like us to show? Slide 4. No, sorry, slide 5. Thank you for that. So I have already reiterated those things. So what is of importance here? That those who acquire major assets for them in mining or who invest in development, they will have to do it eventually because it makes sense. They'll have to restructure their portfolios in line with their new priorities. Projects that seem to be hard to implement, so they may seem as not as interesting compared to others. So they'll be generating in turn secondary transactions, and secondary sales may become possible and incentivize those who recently acquired assets to exit maybe some of their shares or some of the stakes in those companies, and so most likely they may sell those projects instead of keeping them, and in their turn it will look like how children grow, like younger brothers, maybe fitting clothes of their elderly siblings. So that will be a chance to have more turnover assets and to have more faster development. And we can expect that new effective players will be come to.
Now, so this movement is well underway, and we will continue to follow it going forward. So on the next slide, please. So looking at transactions that can be expected in the market, so given this pace of acquisitions by Mr. Swiblev, probably will see 1 or 2 transactions from him. I mean, not okay, 1 or 2, as I said. So these are acquisition transactions, and among the acquisitions, he may also allocating assets for sale or just separating some of its assets from his recent portfolio, and obviously it will take less time than going forward with the new transactions. And then the next line would be Polis and Polymetal. So the 2 companies that are actively engaged in the market, now they are selling those assets that no longer interest to them. So whether the resource base is already depleted or reaching those values that are unsatisfactory for these major companies, and probably we'll see these another story such as Kanji, when the resource base was transferred to the contracting structures. They used to work for Polymetal, but they no longer belong to Polymetal. So just there's the separation from the public company, and now there are additional opportunities just to continue the business, I mean, with a new owner, and plus processing facilities. So, and this can be seen as a continuation again of the process flow, I mean, relying on the resource basis. So that's what Polymetal is doing. So they will be looking for very active players in the market, as Khanjinsk, for instance. And we have also seen some announcements between Polymetal and the mining company. So just that's the approach of Polymetal towards increasing their hubs. So whether those hubs are like providing resource bases and promoting junior companies and making these co-investment projects and just taking this burden of exploration, because there is the difference between exploration and production. There are two different lines of business, in fact, and there's one exciting case to me, which I think many companies, be it smaller or bigger companies, they could learn some lessons from it. So if we look at the Apollo's approaches, probably they'll be relying on their own assets rather than making some ventures with other companies. And whether they'll see these major projects to be implemented in the market in terms of the scale and potential for further development. So we may see new buyers and probably for production projects, and I believe that this trend is not unique to Russia, but it extends to the neighboring countries as well. And yes, so new activities may emerge and new acquisitions may be on the market, but this will depend on the level of the risk and because on the quality and systematic also exploration. So the high quality of exploration, this high quality and conservative analysis of results is required if we want to go through the process of acquisition. And unfortunately, we don't have that many companies that can provide the required level of quality. And for sometimes, so we can see these examples, and this example is on the table. So Alexei Semenyuk just can be seen as a presenter at various seminars, and he was describing this case from the company. So this is an open source of information, and we can use it as a benchmark. So next, so we've covered Kinross A and then Petropavlovsk, so that we know that their shares lost their value by 2 times, and what we can expect is that some concentration in Petropavlovsk, but that it's not that feasible with the 30% of ownership. Right, they may be buying more shares, but what comes next? When buying shares, and this need to be coupled with other acquisitions. And again, with this 30% of votes in the company, it's hard to make a decisive step. So next project, which is called Высочайший, it's like the highest company that the Высочайший, they went through the IPO, and there was a huge appetite on the part of investors because they wanted to buy their shares during IPO, and probably that was also one of the factors preventing the process from completion. So there was a mismatch between estimation of the market and estimation of investors. So that was a failed attempt at IPO, and that's UGMK received the approval from the Anti-Monopoly Service to acquire 100% of shares. So we have seen, by the way, many approvals from the Anti-Monopoly Service for the planned acquisitions, which did not materialize, and this asset is there, so it is being offered on the market, and therefore I believe the process will be brought to conclusion in some near term. So what else? Some assets that are owned by the companies that will be willing to sell them in the future. And so if we want to differentiate between these assets that are of interest and those assets that are no longer of interest to the companies, so say assets that were acquired back in the 1990s, and now the shareholders, they're just losing their physical opportunities because they're getting older, because their status is changing, because other ideas are at play in the market, or that due to other conditions and reasons. So whenever we see an asset that it is a plateau or there's a flat stage, obviously there's a high probability that other players may take note of it and thinking of buying it at a certain price, and that was the second half of the 20s, and then on the 20 biggest companies are the gold mining companies. So we look at this top 20 and we see that there is lots of dynamics and there is high interest in the market towards both the operational sides and even exploration, production, and even brownfields and greenfields alike. As a result, I believe that we will see a drastic modification or change in the positions in these top 20 companies and the assets. So this will also bring a change in the quality and in the names. I mean, in this second layer of top 10 companies. So it will need to revise, I mean, the positions of all other players that just stand below this top 10 or top 20 threshold. So, and we may see consolidation examples in the industry as well. Next slide, please. So next slide, listing or delisting. Again, with a chart sheet that went against IPO at Moscow Exchange nor Gold. Again, removed IPO from the list in London. And that's we see the two IPO reversals. We have two delisting and just one successful listing. And this is an indication to the fact that Russia is becoming self-sufficient. So in terms of financing, so we have very strong financing tools, and the inflow of private money, even if this money is received not through the Moscow Exchange, but through the banks, because the banks are now offering the rates that are quite comfortable and they are more accessible to the companies, and we see that quality has been improving over the past 10 to 20 years. So that the Russian industry gets its own financing, and it no longer needs these external funds. I mean, to that extent that may be affected by political factors or other considerations. So that my conclusion is that foreign funds will not be just received in greater volumes as we saw them in the 1990s and in early 20s. So yes, at that time, so there was a specific reason for that, and like the iron wall was crashed, and then there was the inflow on foreign investment to the company. So it was more of a mutual introduction of the Russian market and the other markets in Russia. And then so we started off with that support from foreign funds, and then we learned how to live relying on our own funds, and we built a substantial resource base. And I would like to conclude by saying that mergers and acquisitions in the market, so they will be there. So, and we'll see that the gold mining companies will take an active role and probably supported by other metals such as silver. So production projects, again, will be appearing, the production projects for gold and other precious metals. So these projects are appealing to investors, but they also have their own list of metals to be invested in. And so we'll see that transparency will be increasing among the companies. So many companies, those working in more closed sectors, so they're just providing information that transactions are becoming more transparent, disclosing many of its aspects, and this high level of accessibility today as compared to the situation that we had 15 or 20 years ago. The consolidation will be strengthening and develop at a faster pace, and there will be tougher competition between major companies and smaller mid-sized companies as well. So on the whole, the Russian gold mining sector will become more resistant to foreign participation or foreign funds. And it's not because of being nationalistic and trying to retain national resources, but it's because of competition. So Russian residents that speak Russian fluently, so they can quickly sort out all the questions. I mean, relying on national legislation and subcontractors, logistics providers, but as compared to even major international companies that sometimes they do not get this very thorough knowledge of Russian specifics and details of regulations. So it's easier to operate in the market for those companies that are already present to them, and as for newcomers, so they will have to put in substantial effort to secure their share in the market. So I believe that there is a lack of competition in this sector, so probably to liven up our projects and in terms of project skills, because it's a buzzword and many people have been using them, and for managers in this sector, because we saw that knowledge was received with the foreign companies that entered Russian market in the 1990s. So at the end of the 1990s, so early 2000 years, and therefore we believe that so this is something that we're missing at the moment. Probably when they try and go abroad to find the required skills and knowledge and overseas, so another location, just to be more resistant to tougher competition abroad. So, and I find that this trend is its inception. So we are just going by tests and trial. Take the example of Norgold and their African projects that was quite successful. Now that's 2/3 of their production capacities are abroad. And the Polymetal is another successful experience of entering Kazakhstan market, and then we'll be just keeping an eye of the major companies and their international projects and newcomers to the market as well. So just looking at 2 to 3 years, so probably 5 to 7 years ahead. So we'll see more transactions, major transactions, and very substantial transactions, and their totality will be changing this landscape of mining in Russia. So in terms of quantity and quality, we'll see a certain growth. And that brings me to the end of my presentation. And if you'd like to some clarification, here are my contact details, and I'll be happy to take your questions. Mikhail, thank you so much for your exciting presentation. And just I would like to conclude our session for today. I'd like to thank all the panelists, and I'm just giving the floor to Mr. Zablotsky, and see you next time.